All right, weekend's over. I know that weekend always flies right by. Time to get back to work, though. We got some money to make tomorrow. Tomorrow's the first day of a new month. Hope you guys enjoyed the weekend. Hope you guys had a great Monday out there. It's about that time of day again here, isn't it? Time to get ready for tomorrow. Monday evening, 28th day, final day of February 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us fund the best trades setting up for tomorrow. That's Tuesday, first of the month of March. Trading session. Got a bunch of great trades on our radar for tomorrow. We got some really big news tomorrow, and boy, some big gaps on the charts, and gaps love to get filled, and so we get a lot we're going to cover in this video newsletter. As always, before we jump in and get the party going here tonight, you better subscribe to our YouTube channel. I publish this video with my best trade ideas every evening on this channel. Make sure you subscribe, hit that little bell icon, because you know a lot of this stuff is very time sensitive. And also too, if you have any questions for me, drop those questions in the comments section. I would be happy to answer any questions that you might have along the way. And if you guys tune in every evening, if you enjoy this video as much as I enjoy making it, you know the drill. Hit that like button for me here tonight, supporting this YouTube channel. Thank you so much for tuning in, but it's back to work, though. Let's get ready for Tuesday. How are we going to make our money on the first day of March? Well, a lot of opportunities on our radar. You can see a bunch of ranges, right? And you know me, I love some range-bound markets. Range on the E-mini, range on the Nasdaq, range on the crude oil. Anytime I see ranges, we know we're buying low, we're selling high, we're fading the breakouts. Now, got a bunch of great trades selling short off the highs, short off the highs, short off the highs, and because of course we had those big gaps down on the E-minis and gap up on the oil, we've got some really nice breakout potentials on the S&P and the Nasdaq, and of course potentially a breakout going higher here on the oil. I've got both long setups, I have short setups. You know me, I'm a trader. I don't, we're not in the prediction business. We're going to trade whatever these markets give us, and by the end of this video tonight, you'll know my roadmap, my game plan for tomorrow, and you'll have a good set of rules and a good group of setups to get yourself making some money tomorrow, whether you're trading on your own or you're trading with us tomorrow in the trade room. So we're going to cover all my favorite trades here in tonight's video. We'll also cover some stuff to avoid to keep yourself out of trouble for tomorrow. Speaking of tomorrow, though, tomorrow is not your average Tuesday. Tomorrow, of course, is the first of a new month. What you always want to remember is anytime we transition into a new month or a new quarter or a new year, there's always a bit of an uptick in volatility. So we definitely expect there to be an increased volatility, probably for the rest of the week here this week as we go into that, what is really the biggest scheduled news of the week, which is that employment number on Friday. Now, obviously, right now, there's this big cloud hanging over our heads right now because of this, the invasion of Ukraine by Russia. There's obviously a lot of new information coming in at any given moment right now. We've heard about nukes being, put at the table here. We've heard about additional sanctions. So just be aware there's a lot of known unknowns out there that at any time could really kind of shake these markets up here tomorrow and the rest of the week. So, tomorrow morning in the trade room, I'm going to make sure I have my news feed going, and we'll definitely be keeping a very close eye on new developing stories out of the wires tomorrow morning. Outside of that, we really have one of the biggest news reports of the week tomorrow, and that is that ISM manufacturing index. Anytime you see those three letters, ISM, we've got an ISM services number later on this week. Generally speaking, the ISM manufacturing index is one of the biggest potential market movers you're going to get for the markets that we trade, at least, and that tomorrow will be at 10 o'clock Eastern time. You do not want to miss that 10 o'clock to 11 o'clock block tomorrow. If you could only be at your desk tomorrow for an hour, I would say definitely 9:45 to 10:45. Get yourself prepped up before the news comes out, and then trade the reaction. Remember, we don't trade the news itself. News is noise. We trade the price action reaction to the news. I'll walk you guys through it, of course, tomorrow morning in the trade room. But if you're trading on your own tomorrow, though, that's definitely something you're going to want to be aware of as a market's catalyst for tomorrow. And of course, we'll be in our trade room at 8 o'clock Eastern time with a front row seat. Now, this really puts a lot of, I'll tell you, there's a big spotlight on tomorrow, because as we go into Wednesday, we've got that testimony from Powell. He'll be testifying on Wednesday morning at 10 o'clock. That oftentimes does throw a bit of a wrench into the week, right? So that really puts a sense of urgency on Tuesday's trading session. As we go into Thursday definitely looks a whole lot more open. The second day of testimony usually is nowhere near as potent as the first day of testimony. So I definitely would expect Thursday to be a little more wide open. And I say that because Friday is that employment number, the non-farm payroll number. I would say the biggest news reports are going to be that ISM manufacturing, the non-farm on Friday, and then definitely, of course, we'll hear from Jerome Powell on the Senate floor on Wednesday morning. But again, tomorrow, though, definitely don't miss that 10 o'clock to 11 o'clock block of time tomorrow, because I would imagine that is potential to be some pretty big market moving events. And again, we'll be in the trade room tomorrow at 8 o'clock, right? So we'll be well ahead of that news. We'll get things all ready, and we'll probably find a couple trades setting up before that news comes out. So definitely come out and join us, and we can trade that stuff together. Over to our charts now. S&P's ready. Nasdaq's ready. Oil's ready. I'm glad to see you are ready right along with us here. How about some S&P? Let's get this party going. The S&P and the Nasdaq are pretty darn similar. There are a couple differences here on the S&P and the Nasdaq, but anything I talk about right now on the S&P can probably be interchangeable with the Nasdaq, back and forth on that. So just be aware of that. I'll do my best not to repeat myself too much on these two markets. What's the most important factor that's affecting this market right now? Well, you can see we had that big gap down, and you come in this morning, there really wasn't any new information that came out yesterday. You know what I mean? There wasn't like there was some huge sensational headline that hit the tape like there was last week. And so it was kind of a surprise to come in this morning and be like, what the hell's going on? It almost felt like our data was wrong, right? How many people looked at the chart this morning and were like, am I missing some data on this? This is an outrageously large and unprecedented gap down, just an enormous gap down. And usually whenever we see a big gap in one direction, usually the retest of that low is almost a guarantee before we go back up to fill that gap. You can see right away the bears tried once, bears tried twice, a classic crown reversal that we talk about in our video classes off of that low. And that then leads into this really strong run higher. And that really is one of the most important clues on this chart, because anytime we see a real strong move in one direction, we know the odds are pretty darn good we're going to see a two-legged pullback and a retest in this case, of that high. And so we know where the buyers want to get to right now. The buyers, there's no doubt in my mind, the buyers have one thing on their mind right now, and that is to retest that high up there at, it's just a little bit above that prior swing, right? 85 half. So that's I think one of the biggest clues here is the strength of that move. Buyers are obviously buying up that dip, and they're trying to go back and retest those highs. Now, at the same time, if the buyers can push through that high, we get some breakout potential for tomorrow. Look at all the wide open space we have overhead until we really run into 83 and a quarter, 4,500, big round number. There's a big juicy magnet up there for the buyers to fantasize about for tomorrow. So that is definitely where the buyers would like to get to. Think of that 4,500 level as a big runaway target. Maybe not for tomorrow, but for later on in the week here. What else do we have? What else is an important clue on this chart right now? The range. The ranges are always a very important clue. Now you'll notice we kind of get chopped up inside that range. We pop up, we come back, we jump around a little bit, and we end up rotating back higher. couple things that are interesting about this range. The amount we go below the range is exactly where they're stalled out right now. We call that the pendulum swing. Ranges are balanced areas on a chart. And so when a market swings below the range, goes back higher, we like to use that level, right, as a level of resistance. So this whole area up here is resistance. Why is this range so important? Well, it's a magnet. And so as you can imagine, if the buyers, if they can get their retest and then they can't keep going, absolutely that range magnet becomes a definite objective for the sellers. And you can imagine there'll be a lot of potential shorts, one of which we'll talk about here tonight, looking for that short off the high here. And I'll tell you, in a situation like we're seeing right now where we had that big gap down and we're really in a very volatile overall scenario with this situation developing in Ukraine right now, it's not far-fetched to think that we might see some shorts off that high, and then this big pendulum swing comes down. This thing may really drop and we can get some good shorts as we trade the turn, as we say. So I think this range is the second kind of most important factor here on this chart. The bears would love to sell off that high, and really for the most part, the bears want to get back down to this area here, take out those lows, and they'd love to get down to really take out that big, not a gap fill, but again, that big move off that gap. They'd love to go back and retest that. So these are the factors that are really impacting this market right now. How do we buy it? How do we sell it? What's the game plan here for tomorrow? Well, again, I think as we go higher here, I think the buyers have to push higher here. I think we have a great opportunity here right now to sell this thing short. The only thing we got to worry about is the momentum. Remember, there's two important questions you kind of always want to ask yourself. How's my location and how is my momentum? Right? What does location look like up here? It's a great spot to sell because it's resistance above a range. So location is great, but momentum is the problem. If I want to sell at this point now, am I going with momentum or against it? I'm going against momentum. So because of that concern about momentum, we're going to use what we call the 2-try rule. The 2-try rule is pretty simple. Instead of just simply selling off the high, which is a complete gamble when you're going against momentum like this, I'll look for the buyers to try once, the buyers to try twice. We'll use that 2-try rule, and we'll look to basically sell into the stop losses of those buyers, right? So imagine those buyers come out, they try a couple times up here. Think about where their stops are. Now, there's a bunch of variations of this. I'll talk about some different variations of this later on in this video, so make sure you keep on watching all the way through to the end. I got a bunch of little tidbits. Especially if you're a new trader, you definitely want to watch all the way through because I'll be giving you more tips and variations of this as we go deeper into this lesson here tonight. So again, I've got my stop sitting below that low, and that's where a nice strong signal candle can make for an easy short going back down in. Now, at this point now, we know where the market wants to go. If the market was bearish, I would say look for a follow-up trade off the high of this channel. This will be kind of a little bit of a gamble trade because we're overall bullish. I like this add-on when we're going with momentum a little bit more, to be honest with you. A lot of times there'll be a trend line coming in over here, and it can get a little bit hairy there. But that would be another add-on entry for a short off of that new hidden channel as we come down. What I would really look for though is if we can get this thing to pop up, get that 1, get that 2, sell into those stop losses, then we start thinking about these lows down here. And this is where I think you can start to look for some more short selling opportunities as we go. Let's say we do end up now going lower and we start to kind of grind down through that low, right, of that range. You got to remember there's probably going to be some more buyers waiting down there because it's support level below that trading range. If I can get this thing to either 1, 2, 3 and really drop off of that high, right? We call these 1, 2, 3 reversals. Or if we start to get this thing to really drop and start to kind of grind down here, what I'd love to do is is once I start seeing that momentum start to pick up for the bears, I can draw a trend line off those lows. I can bring that trend line right up around that high and start looking for things like trap entries off the high of this channel, trap entries, failure entries off the moving average, pullback combinations off the EMA. Now, I know a lot of you guys have learned these as part of the free trading course, right? I cover all the entry rules and how to find the channels and what time frames to use, and all that stuff's covered in that free trading course. So I know a lot of you guys have learned those entries right now. If you haven't taken that free trading class yet, you definitely want to pause the video right now. I'll put a little button up top here in the upper right-hand corner. That little link up there will take you to the website. I get a free trading class, a little quick start class that will basically give you the entire roadmap. I call it my 3-step strategy: how to find the right market conditions, how to find the right levels, and most importantly, how to use things like traps and failures, pullback entries, to use price action to trigger the entries. I've got hundreds of examples of those setups in that free trading course. If you're sick and tired of missing the best trades each day, or you're taking too many losses, or maybe you feel kind of anxiety because you feel lost out there, that free trading class will definitely help you. It's helped a lot of people here so far. People love that free class here. So watch that again, that failure off the high, and then again, look for that follow-up trade, right, as we go. Now, how do I buy this as we go higher? There are quite a few different types of breakout patterns we look for in our trade room. I'll cover a couple of them here on the S&P, and I'll keep on adding more as we go later on in this video. One of them is called a 1, 2, 3 breakout pattern. Let's say we take out this high here, we hold that pullback, and we end up jamming higher, really jumping off of that moving average, right? Something strong like that we see right there. We call this a 1, 2, 3 breakout. Now, it's very important that you remember it doesn't matter how strong that initial leg is. They have to actually hold that pullback and continue it going higher. In that case, if they can hold that pullback and go, now we'll go out and we'll find a new channel by drawing it backwards off the high, bring it down off that low. And again, one of my favorite entries on this is that first test trap. The first test is always the best test off that channel. And so again, we'll be looking for traps, failures, pullback combos. You'll see a ton of real examples of those inside that quick start class, that free course that I mentioned earlier. Now, where would our targets be on this? Well, what you want to remember is on a breakout, the breakout leg is the measuring leg. So the size of this leg will be the size of that leg. Don't worry so much about the size of the middle leg. That middle leg is kind of the oddball. That's kind of what I call it. It's kind of the oddball. It isn't, sometimes it's bigger, sometimes it's smaller. It doesn't really matter. The size of that breakout leg will determine now where that next objective is. Again, we have a good idea of where the market wants to go, but those measured moves are just so reliable when it comes to range breakouts. So definitely keep that on your radar. I have a couple more breakouts though I want to talk about. So we'll talk more about that, of course, here on the Nasdaq. What if we end up going down? How do I buy down here? Right? How do I buy down here? We talked about if we roll over and it kind of keeps on spitting, right? For example, we go up, buyers once, buyers twice, we run lower. The bears hold that pullback. They jump off it. If you see these bears jumping off that moving average and running lower, that is so much momentum for the bears right now. I don't care if I'm at support below that low. I'm going to find that channel, right? I'm looking for that first test. A lot of times it's the trap entry or the failure entry we talk about in that quick start class. There's a lot of different ways we can take that short off the high there. That'd be a way to do it. But let's say, for example, we go up, we come all the way, I'm still fighting that head cold from a week and a half ago, believe it or not. Let's say we go all the way back down now, and now we're sitting here, right? And now we come in. Now what you want to remember on this is look what happened here. Just look what happened here. Right? See how we take it all the way off that high, and see how the bears come in. They try once, they try twice and back up. Bingo. That's exactly what you want over here, right? So we go up, we come over. We slam down. Now, again, at this point here, do the bears hold this and keep going? 1, 2, 3 breakout, find that channel and short that, right? Is that the play? That's fine by me. Or do the bears end up double bottoming into 1, 2, back up? Or do we end up getting, like we saw back here, where we go 1, 2, and then remember, when this one turns around, now that pendulum swing becomes the objective. And so what you want to do is as the market rotates higher here now, again, I'm buying into stop losses with a 2-try failure pattern, and then we're going to go out and grab that new channel and then trade that first test is the best test. Make sense? Ends up being a 2-try failure, very similar to this, right? 2-try failure into, again, could be a trap, could be a failure, could be a pullback combination. You'll learn the details of that inside the free trading class, and obviously we'll do that together tomorrow morning in our trade room. So that's the way I'm looking at this market right now. At this point, it's kind of a waiting game, right, to see what we look like here once we open up in Asia and get a few hours under our belt and see how this thing starts to open up. And again, keep in mind, we get a bunch of, kind of known unknowns out there with what's happening in Russia. All right, over on the Nasdaq right now, Nasdaq is in a very similar situation. We had that big gap down. The bears tried a couple times to retest. They run it right back up. Big, strong move higher for the buyers. We know exactly where these buyers want to get to. They want to go back and retest that high. If they can keep this party going, a lot like the S&P, there's some wide open space above us, up to those ranges up above us here. You've got that 14,550 range. You got a big top up there at 14,668 up there. That is, of course, kind of the wet dream for the buyers tomorrow, right? That's what the buyers are fantasizing about for tomorrow. And you can definitely see, this could possibly be one big measured move. That's, it's definitely not impossible, but, it does seem a little bit improbable to go all the way in one move here. So we'll see what happens here, but that's what the buyers want to get to. That is kind of their objective. At the same time, though, you can see also, too, just like the S&P, we get the range down here. Market kind of gets chopped up inside a range. It pops up, kind of fills that gap, right? That weekend gap, as we call it. Market rolls lower. And you can see, and this is the same thing on the S&P, they didn't come anywhere near that pendulum swing, right? Nowhere even near that pendulum swing. And I'm sure a lot of this was because of the strength of that move here. But again, look at that pattern again. Right? See how they come rotating off the high, bears once, bears twice, back up from there. This is the stuff that we like to use whenever we see these really deep pullbacks, try to rope in those bears and get that, right, and get those stops getting hit there. So now, really just like the S&P here, the buyers want to retest that high. If they can get through that high, we can look for a breakout. If they can't, we can look for that short off the high here. Buyers would love to come back in and buy that sucker right back up again. Or if the bears get what they want, they'll be able to take this thing lower and keep this party going all the way down to really take out those lows. Almost unfinished business at this point on this chart right now. Now, we talked about as the market goes higher here, a lot of this, again, will be similar that we talked about on the S&P. So I'll do my best not to repeat myself too badly here. As we go higher, though, again, we are bullish right now. So the only way to sell short safely is to wait for these buyers to try twice. Think about where their stops are. Now, another variation, I promised you guys some more variations of this. We know where stops are. Right below that low, right? The range below us is a magnet. Now think about now, if I draw a trend line off of those lower lows, bring it up around that high, think about now how I could find maybe an early entry off of that trend line, right? Or even better, between you, me, and the rest of YouTube, right? This trap would also be a fantastic entry there. Remember, you want to wait for the proper signal candle, and we talk about signal candles, what they should look like, where they should be inside that, right, inside of that free trading class. Okay, we talk about all those smaller details in there. So we're looking for that short, that 2-try failure off that high. And then again, a little bit aggressive trade on this is that follow-up trade to sell short from there, right? Could be a trap entry, failure entry, any of the entry patterns we talk about in that free class. So we know those options are there. I'm not a huge fan of that one. I'm just not, because again, we're going against momentum. Well, the overall momentum is bullish. Usually that's not going to be as reliable of a short, right? We want to get that short off the high. And then again, as we go lower here, if this thing makes a tumble, if I can get the bears now to hold that pullback and jump, remember, it does not matter how strong that pullback is. They have to hold that pullback and keep it going. Okay, so right there, if they don't hold that pullback right there, that's when we start looking for the bears trying twice and back up again. If they can hold that with a 1, 2, 3 reversal, now we mark up that low, mark up that high. And again, I love traps, but I'll take whatever the market gives me, right? Traps are great. Buyer failures as they get caught buying above the moving average, those work great. Pullback combinations work great. Again, you guys know most of these already, or if you've taken the free course yet, same thing. If you haven't done so yet, make sure you do that. Grab that trading course. So we've got that one covered on the way down. How do we buy a breakout here? What does a breakout look like? We talked about the 1, 2, 3 breakout, right, with that channel. Okay, here's another one you want to keep on your radar here for tomorrow. Be a pop and grind. Pop and grinds are very, very common in today's markets, and those are, it pops and grinds, right? Pops and grinds. This one can be a little misleading because it doesn't pull back to the moving average and jump, right, like a 1, 2, 3 breakout would. It just kind of grinds higher. These are usually caused by some sort of short squeeze or some melt-up situation, right? These are very common whenever we've got a big move down, and then now the bears are getting out and the market starts to grind higher. This one seems pretty likely because we had that big move down before. So as this big move down, if this big move down begins to evaporate here, if things begin to stabilize in Ukraine, I would imagine those bears could just get the hell out of the way here. It could jump and start to grind going higher. Now, when it grinds like that, you always want to make sure you find a pullback entry. What I'll usually do is as it starts to grind going higher, I'm going to take out my trend line, draw it really tight off that high, and then anchor it down at a major low. This creates those hidden channels, and hidden channels are they are where the money is. Then what you want to do is start thinking about where you got some prior swings. Try to get underneath those prior swings. That will put you below the moving average. Trap in those bears with a literal trap setup or a seller failure setup as the bears try to foolishly short back into those highs there, in that range there. Buy into those stops, trap, failure, pullback combo. Again, any of those will work as we go higher here. That is a fantastic breakout pattern as well. I got a couple more breakouts. I'm going to cover those on the oil, so don't go leaving me just yet. I know we're getting late in the video here right now, but I think you can do it. Stay strong out there. Keep watching. So we know we've got that potential breakout as we go higher here. We know how we're going to sell off of that high. And again, if we end up back inside this support zone below that trading range, remember, a couple options here. One would be a double bottom. Anytime we see a strong move in one direction, we know it's pretty good chance they're going to retest that low. Maybe they double bottom, they retest that low. Then we go 1, 2, and back up. Or, like we saw over here, where they run lower, it's just 1, 2, and then straight back up again. We take out that low, the bears come in, they try once, they try twice. Do we see a trap? Right? Little trap entry there. Okay, that's a great entry here. Do we see a hidden channel entry there? You know what I'm saying? This is why I said earlier, there's a lot of variations of this 2-try failure. Sometimes we get them, sometimes we don't, but that will definitely be an option there for us as we go higher. And then again, because we have this bullish overall momentum now, that is where you can start to really sink your teeth into trading the turn, as we say. Find that new channel. We know now the amount below the range. will likely be the amount above the range. And my job is to find a way in on that first test off the low of that channel before we get back up to that pendulum swing. All right, guys, so that's going to be some easy ways to buy off of those lows for tomorrow. And again, we're going to do this together tomorrow every morning in our trade room. I'm just simply going over my game plan because professional traders, we don't just kind of will our way to it. We plan our trades beforehand and we trade our plan. We kind of iron out all the issues beforehand. That way, when it sets up in the trade room in the real time, we're prepared for it. We know what to do with it. Now, again, if we end up going lower and they hold that breakout and go lower, now we mark up that new channel. We look for that short off the high. First test is the best test. Or maybe it ends up spitting and ends up grinding down. Yeah, that's fine by me too. Those grinders are very reliable. Find that channel by drawing it tight off that low, get above the moving average, get those failures, pullback combos, and then remember, where would the leg be? What would the target be on this? Remember, the size of that breakout leg, right? That's the size of that leg, right? Trends love to come in threes. 1, 2, 3. We take the size of that first leg, the third leg. Those are almost always symmetrical. Every once in a while, they'll be different. Every once in a while, they'll use the middle leg, right, in a real strong trend environment. But usually, it's that first and third leg as we go lower. All right, guys? So a lot of great trades setting up here on the NASDAQ. We'll definitely be keeping an eye out again for any kind of unscheduled headlines coming out of Ukraine that could shake things up, because it definitely could. How about some oil? If there's one market right now that is really, really susceptible to some news headlines, it is definitely the oil. And again, you got the oil here with this huge gap up. I'll bet everybody came out this morning and said, am I missing something here right now? Is this a holiday or something? What happened? As you can see, that is just a monster gap up, right? Basically a $6 gap up, $7 gap up from 92, basically up to 99, and you can see kind of what happened, right? The market gaps up. What I think is very interesting about this particular chart is that unlike the S&P and the Nasdaq that quickly took it back in the other direction, if you look at take the Nasdaq for example, the gap was down. And they completely reversed it right away. Not right away, obviously. They tried a couple times to keep it going lower, but it completely reversed going higher. How do we know it was a reversal? Once we start seeing the buyers jump off the moving average, the buyers have control of this. So when you go to the oil chart, one thing that is very clear on this is the buyers still have their hooks in this. I do realize it is a bear-looking chart right now with lower lows and lower highs. But remember, price action trading, we don't just lower lows or higher highs. That's not indicative of who has control of the trend. It's all about how the market reacts to the moving average. We talked about how the S&P and the Nasdaq, they came in jumping higher off the moving average. Look at this. The bears, they never really took control of this market, really. Every time we made that lower low, the bears struggled, right? Lower low, the bears struggled. We didn't see the bears coming in for a successful short at all on this. So you could look at this chart, at least I look at this chart, and I think, okay, this is a big gap up. And we've got some buyers. The buyers basically were just simply trying to get most likely back underneath that low and trying to find some discounted prices to buy this thing, because it was such a huge gap up. So right now, this is still very much a bull market. Now, with that said, looking at the chart right now, there really isn't a lot of easy ways to get long. Because think about it. If we go higher here on oil right now, we're going to run first of all, one big clue is this huge, strong spike higher. So we know where the buyers want to get to, right? That's one big clue. That's a pretty important clue. The second big clue is that the sellers never took control of this market. You can see right away, every time they made a lower low, they barely did anything with it. That is not indicative of a bear market at all. It'd be a bull market example. And then the third clue we have is this range, right? The range is definitely bearish. We get a bear bias into that trading range. And you can see, of course, here you got some bears here right now trying to sell short, right, off of that high right now. I'll tell you, the bulls may have their hooks in this thing right now, but it's not easy to find a long trade here. The only way to really buy this is to buy it down underneath this trading range, because as we go higher, if we go higher here, what's the problem now? The problem is we're running right into, and these are tough because a lot of times, you got that swing up there, that swing. A lot of times these things are kind of a little, what's the best way to say it? It's almost a false top, right? You know what I mean? There's oftentimes a little bit extra, levels that are kind of standing right in the way there. And so you can see as we go higher, this is not going to be an easy market to get long at. And let's not forget, this is $99 a barrel. I mean, unless there's some big development, right, that comes out, right? There have to be fresh turmoil, something new happens. If things keep the way they're going right now, where the peace talks continue and everybody keeps on kind of posturing about it, we're probably not going to see that catalyst to get this market really well above the 100. Again, a lot of unknowns right now. But looking at this, until something changes, there really isn't a lot we can do here for the long side except to buy off of the low of this trading range. The sellers really have all the best opportunities right now. We get a nice strong pop up. We retest the high. There'd be a great short back down again. If we can break through this range low, we've got that huge. This is the only market that hasn't filled the gap yet. Right? Oil is the only one of these three charts. The S&P did it. The Nasdaq did it. Oil is the odd amigo out right now, back at 91, 94. There is a big bullseye on that previous close from Friday, that gap fill for those sellers. So bears were looking for that short off the high. Bears can look for that breakout going down. Bears can also look to sell short off these highs. Like I said, you really have a lot more potential opportunities on the sell side. Doesn't mean you can't buy this, but this means we got to be careful here. As we go higher, the buyers have to we have to really see some, like I said, something has to change here if we're going to buy this thing going higher. As it goes lower, I can definitely buy this thing off those lows, but again, because it's so bearish, right? Because it is bearish, we've got to be careful here with those long side trades. So what would be some options here for us right now? I think, again, assuming nothing changes, assuming no big sensational headlines come out of Ukraine in the next 12 hours or so, 5-6 hours again, we want to see a retest of that high. That is a relatively strong push higher here. We are overall in a bearish, I realize the buyers still have the hooks in this thing, but we are still, for the most part, that bear bias range. At that point now, I can look for a one-try failure. I can grab that first test channel coming down. That will be a great trade short. Look for those traps, those failures, those pullback combos there, right? We retest the high, mission accomplished for the buyers. We then see the buyers try to come in, they fail, we sell into stops, right? If you're a buyer and you're stuck long above the range, that range will drag it right back down to that range here. We can use those buyer stop losses, because the only way to get out of a long trade is to sell your way out. We can sell into those buyer failures up there, and then again, that first test. As we go, buyers end up down at these lows. Now, once we end up down at these lows here, the challenge we're going to have here is this trend line. Okay, one of the things we always talk about in our trade room is, before you go taking your entry pattern, look at the previous leg. The previous leg will often tell you if there's anything in your way, how strong it is, how weak it is. It's one of the easiest ways to kind of identify what type of entry setup will work best in that situation. So the previous leg in this situation would be 2 legs down. And in that case, we want to use that 2-try failure. But ideally here now, we want to use it off of that trend line, right? Or try to get around that trend line. Bears try once, bears try twice, again, because we are in a bearish bias range right now. I would not be afraid of that entry long, but I definitely would want this thing to clear that trend line and make sure we're getting it from there. And then again, because this is a kind of a bear bias range, I'm not a big fan of that follow-up trade here. These are the types of trades, again, you'll walk right into some sort of trend line coming down. So I'm not a huge fan of that follow-up trade going against the trend. But again, like I mentioned earlier, I love that trade, selling short off the high here. What would really make us happy here would be if the market was to go really strong going higher. That would probably be one of the best possible scenarios here, because then either we get that double top retest or it's just simply straight up one. Remember, it may be a bearish bias range, but if we see a strong pop higher, right, strong pop higher, you've got to respect that momentum. So you let the buyers try a couple times, you think about where their stops are, and we just simply look for shorts into those stops, right? Selling off that two-try failure, and now this is where the magic comes, right? This is where the money is right here. When you get a big break out of a range like that, you catch those buyers, right, chasing after it. Again, there are probably some levels of resistance up there I just don't see. 98 is a big round number. Anywhere up here, though, if those buyers start to struggle, we can look for that short off the high, and then again grab that first test. That first test is a great re-entry because now you get all that momentum coming swinging lower, and you know exactly where they want to get to on the other side of that trading range. You almost hope, for the seller's sake, you almost hope this thing goes higher overnight so we can sell that thing right back down again, right? Be very careful buying up here, right? I would say probably the best way to get long up here would be a very strong move. And again, I would want to hear something new, right? Something new happens, some new development happens that shakes this thing up. I want to see a two-try breakout. Here's another breakout pattern you can use here. This would be a third breakout pattern now we've talked about. Strong move up, shallow pullback, higher high in price, trap. A trap will be your best friend in this situation because we're running so close to those big highs up there. I talk about traps a lot, about why I like them, where I don't like them. We talk a lot about that stuff in that free trading class I mentioned earlier, right? So strong pop-up, shallow pullback, higher high in price, traps, baby. Yep, two-try trap, two-try breakout. One of my favorites. We see a lot of those in our trade room. And again, make no mistake, the goal is not to go to 100 at that point. The goal is go back and take out that high there at 99.10, right? Then we can worry about going higher. And also, too, don't be totally surprised if it was to go up. We get that trap entry, we take out that high, and then we sit here in a range. And once we see a range, we basically execute that same range game plan once again. And so that'll give you a reason to come out and join us every morning in the trade room, because we'll obviously adapt to this stuff as we see it going. Would really love to see this market take out that low, either hold that breakout with a 1, 2, 3 breakout pattern, 1, 2, 3 break down, mark that new channel, drill down to your faster time frame and grab that short off the high. We've talked about the entries here quite a bit already. Or we pop down, we start to grind down. That's one of my favorite types of channels. Draw that trend line there, pin it up around those highs. Think about those traps, right? We may also see the underbelly of this become an area of resistance too. Trap, failure, pullback combo. The key is just don't chase it as it goes lower. Right? We make our money on good entries. We want to sell high, not sell low. We want to buy low, right? Not buy high. So don't chase them. Find those channels or those range levels, and then incorporate those with the entry setup to talk about in that free trading course. Now, obviously, guys, I'm sure I've missed a little bit. I'm sure I've missed some wrinkle here tonight. But tomorrow, though, I'm not going to miss that tomorrow. So tomorrow, hopefully I'll see you there with me in the trade room, 8 o'clock Eastern time. We're going to prep those charts after the overnight stuff. We'll check in any headlines, update our levels, and we'll trade this stuff together. If you're sick and tired of missing the best trades each day, if you're not getting the results you want, if you're taking too many losses, or maybe you're like a lot of traders and you have anxiety when you're trading because you don't quite know what you're doing, you've lost a lot of money already. I had a bad problem with emotions when I was a new trader. I will get you through that every morning together in our trade room. So don't do it alone. Come out and do it with me every morning at the opening bell. I'll put all of the membership details for you guys right in the description of this YouTube channel, YouTube video. If you're on the website right now, I'll put a big button for you guys down below me. All right, guys, don't be afraid to call the office. That toll-free phone number will ring right to my cell if I leave the office here this afternoon. And as always, you can drop questions in the comment section below. Grab the free course, grab the advanced membership, and I'll see you tomorrow morning at the opening bell. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.